What's up, everyone? Dylan here. I wanted to hop on and talk about some things that have been going on in the market recently, as well as some key context to look out for going into the future that will hopefully give everyone an edge in coming up with some actionable trade ideas. With that said, we'll hop right into it. So, before I start going into the new information, I wanted to do a quick recap on some of the things we went over last week. Okay, so to start it off, I talked about the bullish divergences that were forming on, using the RSI. So since the last time I spoke, the S&P futures came off as much as 2.8%, yet the divergences stayed intact, which is very interesting and definitely worth noting. Okay, so using the same reference point as last video, right, the October 3rd low, and then now we're using an even lower low from the last video I did. You could still see, if I zoom in to this RSI, you can still see that despite the S&P making a lower low, the RSI never made a lower low, right? You see how that low never broke below that low right here, where my cursor is. Okay, so because of that, it's something worth noting still. Okay, now the thing with technicals, right? The thing with technical analysis is that nothing is guaranteed. If technicals had 100% probability rate, I would not be here making this video, right? I'd be having a pina colada with Jeff Bezos, on a yacht going through the Maldives. But, unfortunately, it's our job as traders to, match these pieces of context together to get an overall thesis. So definitely keep an eye on that divergence going forward, okay? Another thing I went over last week was on the bearish side of things, okay? I discussed the 200-day moving average on the S&P 500 cash index. Okay, I'm going to use US 500, which is the same as SPX, but it shows the extended hours. Okay, so I think using the 200-day moving average on US 500 is the best indication, as opposed to using SPX or S&P futures. So this is clearly a key line, as I talked about last week. We've had different areas where it has acted as support and resistance, okay? In last week's video, I talked about how Friday, October 20th was the first daily candle close below that 200-day moving average since mid-March, okay? So the bulls have been in control, because of numerous reasons, but also because of the technical fact that price was staying above the 200-day moving average, okay? So ever since Friday, October 20th, the bulls have not been able to close a daily candle above that line. And I told you guys last week, I said, if that continues, it is likely that the bears will continue putting pressure on the index, okay? So when I talked last week's video, this was that candle right here. That was last Monday, okay? Since then, the very next two sessions both tested that exact 200-day moving average and both failed to close above. So you can see here, like I said, I posted the video after this day, and then Tuesday and Wednesday both tested that 200-day moving average, and you could see that both candles failed to close the daily candle above. And as a result, the bears put pressure on price and, triggered a move lower. Okay, so going forward, we are now coming back into that area. Okay, that 200-day moving average is sitting at 4252.8, call it 4253. So you want to see, if you're a bull, you want to see a daily close above 4253 on US 500, which is just the SPX cash index. Okay, very, very important. So if the bulls can manage to have a daily close above, we could see some more upside pressure. Right, on the flip side, if bears continue defending that line, we might see another rollover up here. Okay, so definitely continue watching that. Okay, going forward, I wanted to talk about a few different things that we're going to be seeing in the future. Right, I'm going to talk about some economic events to look out for and some key technical areas to watch. Okay, so we have a busy week. Okay, so today was a busy day. Today we had the Fed decision. We also had a U.S. Treasury quarterly refunding announcement, which sparked this morning's rally. So at 8:30 a.m., we had some Treasury news, and it sparked a pretty big rally in the S&P, where it was seen rallying from 41.94 on the futures all the way to up towards the 42.50 handle. So that was one thing today. We also had ISM manufacturing. We had the Fed meeting, right? There was a few different economic events today, and as you could see, the S&P, managed to rally higher because of those catalysts. So going forward, tomorrow we have initial jobless claims at 8:30 a.m. Eastern time, and then the big one tomorrow is the Apple earnings after the close. Okay, that's very, very important. I'm going to talk about earnings in this video as well. On Friday, we have the jobs report at 8:30 a.m. Eastern time, which is also a key economic event. And then we have those other two, after the fact. Okay, so definitely keep an eye on that. So what I wanted to go over is the earnings. So a lot of people were asking me, since the last time I spoke, they said, hey, Dylan, how is the S&P able to drop 2.8% despite yields coming off? Okay, so I've been talking about yields in the last two videos, saying, there's a good chance that if yields continue lower and bonds go higher, that will support the S&P. But over the last week, the S&P has managed, or I should say last week, right, from Wednesday, Thursday, Friday of last week, the S&P came off. And a lot of people were like, hey, why did that happen if, yields also came off? So you could see TNX is, TNX has come off of 5%, right? That was expected resistance at 5%, hit 5%, and has since come off, right? That has been anticipated. As a result, TLT has found support at my 82.6 level and has bounced, okay? So, Dylan, why was it that the S&P managed to come off an additional 2.8% since the last time you spoke? The reasoning is because of disappointing earnings, okay? So last week, specifically on Tuesday evening, and then again on Wednesday and Thursday, we had some poor negative earnings, okay? If we look at, say, Google, right, you could see Google had, this massive drop from last Tuesday to Wednesday, right, where it dropped over 10% from Tuesday's close to Wednesday's open, right? You could see it drop 10.65%. That's a big move for, such a large mega cap tech name. Also, we have, Meta, right? We had Meta drop a decent amount too. It has since come back and managed to rally back, but this was some of the reasoning for last week's drop, okay? So, essentially, because of last week's poor tech earnings, the S&P and the NASDAQ sold off hard. In fact, to give you guys a very, very clear example of last week's big drop, I'm going to show you these two candles on the NASDAQ. So 2 consecutive days from the high of Wednesday to the low of Thursday, the NASDAQ index dropped 4.8%. That is very, very significant. If I were to say, hey, find me another time where 2 consecutive days in a row it dropped more than 2%, it would take you some time to find that because it just doesn't happen often. Okay, so definitely continue keeping an eye on earnings reports, right? As I said, tomorrow we have Apple, which happens to be the largest weighted name in the entire market. So essentially, if Apple comes out and has blowout earnings, either good or bad, it has the ability to change the entire sentiment of the market. Okay, so one of the things that I wanted to say is I wanted to talk about this right here. So I found this on it was on Zero Hedge, which is a Twitter page, and he also tagged Charlie Bolello. So you could see this. So this is 1 day late. These were returns from yesterday. So these are 1 day late, but you could clearly see that the enormous 8, a lot of people are saying either magnificent 7 or enormous 8. There have been essentially less than 10 stocks in the whole entire market that has been responsible for the year-to-date gains in the NASDAQ and the S&P. Okay, so you can see these are crazy returns, right? Nvidia up 182% in 2023, right? Meta, Tesla, Amazon, so on and so forth. So basically what I'm saying is if these names start to give in and start dropping, it is not good for the overall market as a whole, okay? I'm not saying that's going to be the case. What I am saying is to watch out. If those names start to really slip, it can be, giving you, a leading indicator that the rest of the market will follow. Okay, so I'm going to go through some levels to look at for those names to kind of give you guys an idea of what I am looking at in terms of, if these levels are broken, we might be seeing some continued downside pressure. Okay, so I wanted to read this too. It says, since May, right, late May and June, the tech companies, that's when they had that whole AI craze. Any company that was tied to AI, was ripping, right, including Nvidia, right? So I'm going to highlight when this move started. So it started in, middle to late May, and then it extended. Okay, so this move here, it wasn't just tech that led that move. There was other, underlying, pieces of news, right? A lot of people were projecting, inflation to come down and rates to stop, hiking and, other things like that. But part of the biggest part of that momentum to the upside was strong tech, okay? Tech is the heaviest weighted sector in the entire market. So when you have a heavy tech weighting and tech is very, very strong, the overall market is likely going to continue up with tech, right? When tech leads. So tech companies now are not producing the kinds of growth that, was the case back when the AI craze hit the markets in May, okay? So if those names, right, the names that I just showed you on my screen start to come off, it could really it could really dampen the market, okay? So the AI-driven ramp higher in stocks in May and early June was based on very aggressive growth assumptions. So you saw Nvidia, right? Nvidia and other stocks, rally because they were projecting future growth, right? So their market caps were absolutely exploding, doubling, tripling on the way up, which was, leading the overall market higher, okay? So what I wanted to talk about is some of the levels to look at on those names, okay? So most importantly, I wanted to look at Nvidia. Okay, so Nvidia is very important because it has a psychological number. So 400 is a psychological number that is very, very important, and it was actually tested yesterday. So you could see this is a daily chart, right? So it has multiple tests at 400, right? Back from mid-June, right? It's tested there 1, 2, 3, 4, 5 times, right? And the last 3 times have tested all in the last couple weeks. Okay, so yesterday it dipped below 400 for like an hour, right? It didn't last for more than an hour. I believe, call it an hour and a half. And as a result, it ended up trapping shorts below that level, and then once price was able to recapture above 400, the folks who got short needed to stop out, and they got squeezed. And as a result, the market has been seeing a nice rally since. Okay, so going forward, if 400 breaches again in a short amount of time, when I say a short amount of time, I'm talking like the next month, okay, the next week, the next 2 weeks, the next 3 weeks, right? If Nvidia breaks below 400 in the near future, I would expect for some added pressure to the downside, okay? So if that occurs, I would expect that it would first reach down to the 366 area, as that was the low since the big gap up that it had on earnings back in May. And if it were to do that, that's an 8% move, and that would definitely put some added pressure on the overall market. I wanted to show you, let me see. I have this from the Discord. Okay, so this is back. Look at this date. This is back on Wednesday, August 10th of 2022, last year. Okay, this is what I wrote. Okay, I said, the semis, right? When I say semis, I'm talking about the semiconductors, right? Such as Nvidia. The semis are a very important group and tends to act as a leading indicator in the tech sector. Think about it this way. Semiconductors are essentially in every single technology product. With that said, if the demand for them is falling, wouldn't it be obvious to note that it is a negative for the economy as a whole? Okay? So like I said, look at that date, right? August 10th, 2022. If we go back to that date, it is, so August 10th, 2022. I'm going to go from the close of August 10th to where it ended up bottoming, okay? It dropped 40%, okay? So because of that lowering, that lower demand, it had dropped 40%, okay? That is no joke, okay? The difference is back then, it had a way less weighting on the entire market. Okay, since then, Nvidia has managed to rally, say, 200% higher, and as a result, its market cap is now higher. So yesterday, AMD reported earnings. Right, AMD is another semi, and you could see it absolutely ripped today. It was up 9%. Okay, so if and when Nvidia, when Nvidia reports earnings, which is November 21st, so we still have 3 weeks from now. When that occurs, right, you want to see a strong report, okay? Now, that doesn't mean that EPS, right, the headline EPS number has to beat, right? There are other things to look at, such as guidance, revenue, right, projected growth. Right, so AMD reported yesterday, and it was important because it's one of the semiconductor names. But I want you to look at the market cap. Right, AMD has a market cap of 174 billion. Right, it's down here where I'm shaking my cursor. 174 billion, right? Look at Nvidia. Nvidia is about 6 times more than AMD. Okay, so the more that Nvidia moves, it has more of a weighting on the entire market because it's 6 times heavier weighted than AMD. Okay, so a lot of people are saying like, oh, AMD is foreshadowing what will happen with Nvidia. Okay, and if that's the case, then the S&P and the NASDAQ are going to continue higher, right? If Nvidia just bottomed at 400, right, and for the next 3 weeks up until earnings, it continues to rally or go sideways, and then for earnings continues to rally higher, then the overall market will or should follow suit. But if it does not, if it manages to break below 400 and, go towards 366, and then the next one that a lot of people are looking at is to fill that gap, right? If it goes to, if it breaks 400, goes down to 366 and then 318, that's a big move, especially for a top 5 name such as Nvidia, okay? So definitely keep an eye on that 400 level. Very, very, very important. So Apple is tomorrow. If Apple has a blowout earnings, good or bad, right? If it's big in either way, up or down, it will change the sentiment of the market. So essentially, this rally, could all be taken away tomorrow if Apple's earnings are disappointing and the stock, has a big drop. Okay, so if that were to happen, I wanted to go over some key areas on the indices to watch out for. Okay, on NASDAQ, it has been respecting this support level. Okay, so it's tested there 3 times in the last week. So definitely keep an eye on this going forward. If NQ starts to really pull back, look for that area to act as support. And if it doesn't, it could continue lower. Another one is SPX, right? SPX 4200 level. Very, very important because it's 4200 and a lot of options are played on SPX. There's a lot of psychology that are built into that level, right? There's a lot of puts and calls, being played against that. There's just, it's a big level. Okay, so the last time I spoke, right, the last time I posted a video, we had bounced at 4,200, and then the next day also managed to bounce, okay? Because of poor earnings, the next 2-3 days were down, okay? So if that occurs again, where, this move back higher does not last long, maybe it lasts a day, maybe it lasts 2 days, 3 days, who knows, right? But if it does not last long and price starts to break back below that 4,200 level, it's likely that the bears are going to be more aggressive below that. So definitely keep an eye on 4,200. You could see if I go to a 1 minute today, every dip that occurred next to 4,200 got bought. Okay, so that's very, very important, right? The bulls were managed to defend this general area next to 4,200 on each dip that occurred today. Okay, so as long as bulls continue defending that 4,200 area, this move could have some legs higher, especially if the earnings continue or start to really switch and start being optimistic. Okay, so definitely keep an eye on 4,200 SPX as well as NASDAQ trendline, okay? Another thing, if that does occur where Apple, poops its pants, drops down, other earnings or start to slip, and, the indices break 4,200 on SPX and NASDAQ breaks that level right here, right? This is another area that I'm watching, okay? I will be watching, if I go to a daily chart, right here. This candle right here, right? This occurred back in late May, right? It was a drop down, right? Fake out, right? So it dropped down, faked out a lot of shorts, and then price proceeded to gap up and absolutely rip. And that is when the AI craze began. Okay, so from that moment on, the whole AI momentum squeeze started to begin. Okay, so if price were to get back in this range, and I know it's a big range, so we'll have to see what happens if and when it gets there, but I will be looking at that general area to possibly see some support. Okay, so that's it for me today. Hopefully this video was helpful. If it was, give it a thumbs up, leave a comment, and I would appreciate some feedback too. If you guys have feedback of what you want to see more of, what you don't want to like, if there's something you don't like, let me know, because I have no idea. All right, but that's it for now, and I'll see you next week. Peace.